Welcome to our today's feature presentation, Spot and Trade Directional Price Moves. We want to show you how there is a preceding action prior to a strong price move to the upside, to the downside, how you can spot it, and how you can act on it basically from any type of an account. So thank you very much for being here. We want to make it exciting for you, but before we go there, just a little bit of a legal disclaimer. There's a risk in trading and we are educators, not broker dealers. With that, let us dive into the topic. A key question often asks, is there a difference between trading and investing? And when we're looking at the behavior of a trader or investor, it is not. The difference is in the perspective of time. A long-term investor is holding an asset for a longer-term perspective, like weeks, months, or years, while a swing trader holds the asset position for a couple of days and maybe 2 weeks. And a day trader is opening and closing the same position the same day. However, behavior-wise, they all shall take a system and take the decisions from the system with a clear-cut understanding of when to enter, when to exit on the positive side, and where to have a stop or price adjustment level. And we'll give you plenty of examples in here how that can be put into your daily routine or weekly routine so that you can follow clear-cut guidelines for entry, for exit, and for stop. As a consequence, a solid trader or investor follows a clear-cut scheme of analytics to come to the decision to invest or trade or not. And so we want to drive that down here to a couple of steps. First of all, time perspective. What time, what your return do you want to trade for, and what time and what return can you allow to trade for based on a clear-cut risk management? So then the assets, do you want to rather trade stocks, options, futures, FOREX pairs? System-based trading signals. Do you know exactly your entries, your exits, your stops? You shall have that from your system because else you are always interpreting. Then handling strategies. Can you hedge or leverage positions or arbitrage when that is possible when you are in something? And are the odds in your favor at the get-go? Because when the odds are not in your favor, trade is not worth to take because the reward risk perspective is telling you that's not a good trade. And so therefore, why to trade for the trade? We are not working, we're investing. We want to only trade when we have a positive expectation. To hold yourself accountable, we encourage you to record and evaluate every individual trade or over a certain period. We usually recommend 20 trades, then to look back and say, okay, did I behave according to what I committed to? But most traders that just don't do that, they don't follow a plan, but this is where we help. And we are in business since 2008, helping traders to follow clearly structured approaches to go to market. Because there you meet professionals that are prepared, and so therefore we encourage you to have a clear-cut risk and money management in place to hold yourself accountable to play according to your rules, because you basically trade on your own. And so with that, structure and discipline is going to help you to achieve the goals that you strive for. Let us specify some of the system requirements and then go into detail. So first of all, the system has to give you clear-cut direction. So at what point in time is it wise to enter and also in which direction? Sounds easier than it's done, but I help you seeing that on the chart with ease. And then the time perspective. After how many bars do you decide your trade is still good? Or you'll see, I take an exit because my preconceived condition did not come to conclusion, and so therefore I rather invest my money into something that moves, because the system shall give you direction but also give you a time perspective. And I'll show you here today's systems where we say after 3 bars with one like trade colors, we'll leave the trade if it's not in our favorite direction, but we can give one more bar. With another one like top line, we trade for 1 to 10 bars because we traded stronger signals. So and all of that will be shown to you. Also, how to put your entry and your stop. What's the difference? The entry is a clear-cut condition. Under the condition that the price moves to the following price level, I'll trade. If that is not a given, I'm not going to trade. And my stop is at a meaningful place on the chart, staying outside the statistical volatility so that you don't get stopped all the time. And you formulate a positive exit. So how far shall the price move reach at the get-go, and we show you how we'll do that to predict with high probability that you can trade consecutively from clear-cut entries, exits, and with stops. We encourage you to work with the system that gives you a predictability for the directional price move at or above 65%. And you will see why that is an imperative to make money. Yeah, because you want to have an indication with that of a pre-stage of a price move. Yeah, so something of the underlying structure of the market changes before a price move. That's, you can measure that, and then you can follow it. Yeah, then you're filtering out signal to noise. Yeah, so which one is a signal that is valid, or which one is an initiation stage where the price has a high predictability to move forward. The system shall do that for you. You shall not bother, and we'll do that with our Neverlos Trading and TradeColors.com systems. Yeah, and then we do that consecutively. Yeah, these price moves continue themselves because there's always a shuffling of supply and demand and certain of those change points, and with a good system you can follow them at any given time frame or at every given tick frame or every given price range to trade for. Basic trading systems using standard indicators usually look like the following here. Yeah? So you have two lines crossing somewhere, and then with that you get an entry. Yeah? So you would enter here somewhere saying, okay, I go long and I expect that thing to go forever. And you know, basically you were right, but unfortunately other market forces made an opposite price move right here, and this is mostly what you experience also in your past, and you're taken out. What you will learn with us would have been how to enter at this stage and be in a trade when it made that, and also enter at this stage here following the price move of the underlying asset. And that will be very, very important for you to make sound decisions at entry, at exit, and at stop, because only then you will trade with the odds in your favor. Because what you saw here was past-oriented price moves, like based on moving averages, MACD, RSI. Yes, those are the typical past price move orienters, and they say, okay, if there's a difference to the past, then it's good for trading future. It's not. That's not going to work here, or it has a slight probability in your favor, but not a high probability in your favor. Yeah? Probabilities are between 51% and 54%, so that's slightly better than totally guessing. However, I'll show you in a moment, when you consider natural volatility, that still is not a proposition to make money, because the relation from reward to risk at many of the setups is unfavorable for you. It's 1.2, so it's a higher reward that you have to take in comparison to the risk. And then when your system is just giving you a 50-50 chance, you are behind from the get-go. Let's put this now into a simple mathematical formula. Yeah, so when we say, okay, when we have to take a trade where we make 1x, so that's one time the potential reward, but we have to offer 1.2, and the x stands here for the probability, and then we fill it up, and then you see in a moment, if you trade like this, and have to trade like that at certain perspectives, you need a system that gives you 54.5% predictability to break even. Yeah, we haven't even considered slippage and also commissions in that. So how can we make a change? If your system is above 65%, things are radically changing, because you know the 51% system, yeah, 0.51 times $1.20 you sometimes have to risk with 49% probability, negative expectation, same on 54%. However, when you can trade at a 65% predictability, you can have setups that bring you home with a very positive expectation at the end. And we'll show you how it works on the chart. At this point, you might ask yourself, what do you do different for having a higher predictability? Very easy. We use a different measure, a different system, and we use a different indication. We do that by doing a seismic measure. Yeah? In a pre-stage of an eruption or whatever natural event, there is a pre-event that you can measure. And with that, you can predict the likelihood that something's going to happen and the intensity of a potential eruption. And that's what we do with price. We predict at certain points, when you buy here, the price move shall reach to here, then turn around. When you buy here, there was a longer term price move. And with that, we give you always specific entries, like you see it here with those buy signals, and exits. And we do it over and over and over again. And in addition, we trade condition too. So when we measure a potential event, then we formulate a clear entry or exit condition, which puts you in a position to work with buy stop or sell stop orders. So you don't even have to be in front of your computer. If you're a little bit longer term trader, you can pre-stage your orders. They will be fulfilled when your condition 2 is met. If it's not met, the order will delete itself because you place a day order. Yeah. And so with that, we trade at pre-formulated price threshold. Trade above $100.05. If the price of the underlying is not getting there, you don't trade. And you can formulate those conditions at ease or with one point and click on a price ladder. We come to that. Let's take a first glimpse of one of our systems. Our entry-level system is called TradeColors.com. Very easy to follow. You trade at a 2 candle color combination. So that means when 2 reds and 2 blues show that an algorithm is doing that. Yeah? So here was a red candle, 2 blues showed. Then we trade this instance to the upside at a predefined price move and for a predefined time. And the same on the downside. So here you see 2 candles in red after a blue candle, and we trade that to the downside for a predefined price move and for a predefined time, as we promised. Now let's go to the charts and see how it works. Here I highlighted for you immediately over a certain period, April to beginning of November, crude oil futures on a weekly chart. Yeah, and so you might say, wow, weekly chart, that's a long-term perspective. Don't worry about it. We want to show you today from weekly to shorter-term perspectives of how that always works. So here you have your orange box. Yeah, so that signifies the setup. We traded for specific price moves at situation 1 to the downside, and definitely after here we knew after a certain price move we come to target, and bar by bar we measure that price move, and also we measure a maximum price move. So here, for example, that would be a value change of one contract of $2,020. Yeah, so substantial change on that weekly chart. But there's also a situation like number 2, yeah, where you had a long setup potentially. However, the next candle didn't take out the high, so with that, no trade. Yeah. Then situation 3 came up, 2 red candles with a short, and again trading home. Then situation 4, a potential reversal, but the next candle didn't take out the high, so with that, no trade. The same here, the low wasn't taken out, no trade. This one came to a loss, yeah, because you know here we had our stop. And so therefore that would have been stopped in a continuation before it came to target. But then on situation 8, again a winning trade, clear-cut entry with clear-cut exit. So when you count these up, the winners and the losers, so what you see here on the chart is 3 winners and 1 loser. That is a 75% attainment rate. And here you were trading for substantial price moves. You might ask yourself, wow, what does it take at the moment? About $3,000 to be longer term engaged in crude oil, because that's the maintenance margin. So it's not exorbitant. However, we also show how you can trade derivatives of that, where you can do the same trade maybe with $30, $40 of risk increments, and so with that participate in a long-term move of an underlying commodity within a derivative that only requires you very small risk increments. Now we do the same on a 30-minute chart, and I just took that from the day that I'm recording this, which is November 29. Yeah, and so here on that recording we had immediately 2 crude oil opportunities on a 30-minute chart. So you saw one at the end of the day yesterday, yeah, and then just this morning here I was an early riser participating in this. So 4:30, it's a 30-minute chart on crude oil. There was a defined entry and it dropped down, and here you could read how far it's going to drop. So that was a wonderful trade according to specification and came forward and came true. So now for the stock traders, does the system work for stock traders too? Yeah, so we have an Apple chart, daily chart on here. So just recent opportunity in here. So there was the setup box. We had to surpass the high of that candle, which happened the next day. And so then we traded forward for what we have here. See that here, minimum price move of $1.83. Maximum price move of $3, and also time perspective, we wanted to be in a trade as explained for 1, 2, 3 bars max, and then you see why. Then the price turned around, but before it turned around and came down and took away from our profit, we had a pre-formulated profit and we were out of the trade before the negative setup came and would have taken away or would have even stopped us. Yeah, so therefore very important trade for a clear-cut perspective to the upside or to the downside. Here's a long trade, and trade for a clear-cut perspective of time at specific entries. And our algorithms here, they specify when to trade. When two new blue candle color setups are there, which was the case, then we trade, and it was a definite, very wonderful trade. When you see here, the risk was very little, in respect to the entry, with a very nice reward here on the top. Here's another short-term perspective, ES 30-minute chart. And again, you see how we scale out here into the two candle color trade setup, come to target. There's a couple of other situations highlighted, but the low wasn't taken out by the price threshold of the next candle, so therefore no trade. And again, in one continuation, we had two nice trade entries with clearly defined exits. I hope you now see why it is so important for your trading to have an understanding how far the price move from entry shall reach till you exit, because nothing goes forever. And we do that with our SPOO moves for the never loss trading systems, and always portray that on the chart for you so that at any stage you know, because by our definition is a one SPOO price move has a 65% likelihood after 1 to 5 bars to retrace, hold, or reverse. If you know that, you only have a 35% chance to get more, and it might be wise to exit the trade. However, if you stay in the trade after a 2 SPOO price move, you have 5 to 10 bars to get there, and an 85% likelihood that the price will retrace, hold, or reverse before it does a potential other breakout. So it's wise to know that, to shuffle your money and put it to work where prices move, and we help you with that. Aside from the positive exit, stop is very important, because when you know at entry where your stop is, then you can put trading in perspective, and it shall be meaningful at any point, so you have to stay out of what we showed you, the statistical volatility at some point, and also you'll have to compare at entry your expected price move, your SPOO move, in comparison to your potential stop to see if risk reward is in your favor. So you calculate the odds. If risk reward is not in your favor with your system probability, don't take the trade. We don't trade to trade, we trade to achieve a return. And so with that, also we use a time-based exit as you saw it. If after a certain time period the prediction did not come true, there's not enough pressure behind the directional price move that gets us where we want to be, we'll exit and move our money where the prices move. Let us give you some never loss trading top-line examples now that give you an understanding of what type of analytics are dominant and needed for making good and sound short and long-term decisions. What you see here is the daily chart for Tesla for a certain period of time that we highlight here, beginning of September to end of September of 2017. And what we highlighted is all the levels of information that give you good indications of what's going on. So you see here on the bottom, on the volume, we have certain highlights where we expect that a candle that has that, if it's broke to the up or the downside, is giving a directional trade, but those are not our entries. You see here clear-cut entries with a buy signal here and giving you target 1 after 5 bars. Here we got there after 3 after the entry here. So there was the price threshold, buy above 363.71, taken out in that candle, coming to target here, and target number 2 signified on the chart by a dot after 10 bars expectation, but we were there 1, 2, 3, 4, 5 bars after. And then the price started to have a reversal signal, this one here, and that was confirmed too, reverting the price, and again a price pressure signal to the downside. And here you see where it's this target, the little dot on the chart signified it. And then we look at money flow. Money was flowing relative to the market into Tesla on the way up and flowing out of it on the way down. And all of that together within, is it a correlated move or an independent move, is giving you the help of high probability setups. And we go through with you to make these analytics at short time frames and longer time frames for several or all asset classes. So system-based, we trade at the upper level price indications, the threshold, so we saw that, but also we're looking at the underlying perspective because institutions do so too. So that brown curve in the background or purple curve is giving you seasonality. So it gives you an idea, and you saw how Tesla was following that seasonality curve came back to it, followed it, and therefore you could specify with the curve and with the help of those turn points and the signals where prices broke to the upside, to the downside, and how you can spot and follow those solutions. You see a couple of spots on the chart where we might not have taken a trade, like here. Yeah, set a sell signal, but next candle wasn't ticking lower, so therefore we didn't take it. But also we look at the conjoined picture, what's going on the base of the volume indication, the correlated indication, and money flow. Surely a more sophisticated approach than trade colors, but the good thing is trade colors is included in all of our systems, and so therefore if you start out with trade colors you can upgrade at any time, only paying the difference between the two different tuitions. Yeah, and so you see here also Facebook following very strongly the seasonality curve, and what we do is also we portraying it out into the future so that you get an idea between those arrows, whereas usually zones where that asset is in strong demand, or rather between that time selling off. It doesn't have to follow that curve, but it gives you a good indication, because often prices come to its historic projection and take off from there. So we saw here nice moves along that. But as said, we are trading along the price moves at specified signals. So you see here these buy signals indicated and ticked out by the next candle that there's an up move. The up move came to conclusion, then afterwards a certain period of time at its set target dot, then a reversal, and then a long trading opportunity also signifying at entry where there is the best potential exit. And if you were there, you better take it, because you did better take it, because then afterwards the price started an opposite move and you might not be satisfied with your trade, while here you had a clear-cut perspective of entry and exit and taking it after a certain amount of bars. On this chart here, I recorded the development of futures based on the nebulous trading indications. And you see here again, clear-cut entry long around the 85% dot here, the second dot. 85% of the time we expect a retracement, reversal, opposite price move, then opposite price move is called. And you see at these critical price points where the key indications are, and when these price levels are reached, then we often take an opposite perspective. This is again long-term perspective. However, look at it. Notes only take you a margin of about $1,200 to trade long-term, and if you can trade for those returns, they're definitely attractive. But if you want to trade lower time frames, the system will surely give you good trades. For short convenience, I added here on the chart the winning and losing trades based on the indications that were on the chart, and you see we had a lot of more winners than losers, and that's what we're striving for. If you want to learn trading like that, we do it one-on-one, yeah, because everybody has little different perspectives, desires, and wants and needs, and so therefore we focus on your wants and needs at your best available days and times, and we help you to put together a business plan for trading success that suits you. It will be contained with clearly cut entries, exits, and stops, striving at an attainment rate above 65%. In what we call a business plan for trading success, you will learn how to use a financial plan to spell out your expectations, and an action plan of how to prepare for the trades, how to have multiple strategies ready to follow the clear-cut system guidelines with specific entries, exits, and stops. I hope we were able to provide you some insights of how to get to a high probability trading, either with our entry-level system, tradecolors.com. We also have a year-end special on nebulous trading, wealth building, and income generation. Ask us for that when we come together. And there you saw top line with many more detailed indicators and deep analytics of every chart situation. So with that said, you sure have the question, what do I get for all this? Yeah, so we summarized it here in a short way. We have server installed software, so you can run it on multiple computers, and also when you buy a new computer, everything is there. Real-time data, yeah, for free, so there's no monthly fee on that. Clear-cut entry, exit, and stops. Position sizing models, so that you know in respect of your perspective that you are taking the trade on, how much position is recommendable in relation to your agreed upon risk level and money management. How much time do I spend in a trade? Yeah, we saw the 3 bars, the 1 to 5 bars, and more. And how do I handle risk? Yeah, what do I do? How do I adjust my risk and trade with the odds in my favor, following a business plan for trading success that we formulate together. So you'll have really a written document that you can follow. If you liked all that you saw in here and you want to have the opportunity for seeing what we do in a 1 hour one-on-one meeting and consulting session, call us at 866-455-4520 or write us an email at contact@neverlosstrading.com, and we are looking forward to working with you.